Welcome to the Thursday edition of Tech Stocks Daily. Today we're diving into NVIDIA's jaw-dropping 262% revenue explosion and their sizzling new AI chip. We'll uncover why Snowflake stock took a nosedive despite some solid numbers. Also, Microsoft's got big plans for LinkedIn's AI and a potential stock surge, but not without some hiccups. And wait till you hear about Google's bold moves, from an ambitious HubSpot acquisition to pixel production in India. Stay tuned for a whirlwind of cutting-edge tech news and stock insights. Hold on to your GPUs, folks, because NVIDIA has been tearing up the tech world today. Let's dive into why this semiconductor giant is the talk of the town, breaking records like it's a game of Pong on steroids. First off, NVIDIA's latest earnings report is hotter than a GPU trying to run Crisis Max settings. Seriously, someone get me a fan. For the fiscal first quarter, NVIDIA smashed it out of the park with a staggering 262% year-over-year revenue increase, pulling in a jaw-dropping $26 billion. We'll get to why that's even more mind-blowing in just a sec, but let's bask in that glow for a moment. This isn't just any old revenue hike either. It marks the fourth straight quarter that NVIDIA beat its revenue guidance by at least $2 billion. Talk about owning the leaderboard. The cherry on top? They raised their guidance for the next quarter to a comfy $28 billion, setting the stage for more fireworks. Now, a big part of this meteoric rise is thanks to NVIDIA's dominance in the AI chip industry. Think OpenAI's ChatGPT or any of the ultra-sophisticated machine learning models. Chances are they're running on NVIDIA hardware. Companies like Google, Meta, and even Tesla are lining up to get their hands on NVIDIA's latest AI chips. And who can blame them? These chips are like golden tickets to the future of technology. Speaking of chips, let's talk about the Blackwell AI chip. NVIDIA's CEO Jensen Huang announced that production for the Blackwell chips has already started. These bad boys are touted to be twice as powerful as the current gen models and are set to revolutionize AI processing. Think of it as the iPhone launch event, but for AI chips. Huang even teased that they're planning to pump out new models annually, echoing Apple's one-year rhythm of iPhone updates. So, you can think of these GPUs as the iPhones of the AI world. Everyone wants the latest model. The company also announced a 10-for-1 stock split effective June 7th, making shares more accessible to retail investors. Shares have skyrocketed past the $1,000 mark on the back of this news, putting NVIDIA into the prestigious club of companies with four-digit stock prices. Not to be outdone, this AI bonanza has had ripple effects, lifting the spirits of other tech and semiconductor companies. Firms like Supermicro, Dell, Broadcom, and even ARM Holdings saw their shares climb in what can only be described as the NVIDIA tide lifting all boats. Oh, did I mention that NVIDIA's net income jumped to $14.88 billion? That's a seven-fold increase from $2.4 billion as a year ago, folks. It's like NVIDIA is printing money, and investors are eager to grab as much of it as they can. The takeaway? NVIDIA isn't just riding the AI wave, it's making the wave. From explosive earnings and new groundbreaking products to a thriving stock price, NVIDIA is proving it's the big kahuna in the tech ocean. So keep your eyes on this silicon superstar, because if today is any indicator, NVIDIA is far from done surprising us. All right, tech fans, let's dive into today's Snowflake-a-thon. Snowflake Inc. is taking the spotlight, and not entirely for reasons they'd like. Their stock took a nosedive today, down 5.8% by mid-afternoon. What's behind this chill in Snowflake's sunny forecast? Let's break it down. First up, Snowflake just released its Q1 results for fiscal 2025, which ended on April 30th. The company's revenue was solid at $828.71 million, beating the street's expectation of $828.75 million, pretty much neck and neck. But here's the kicker. They posted non-GAAP adjusted earnings per share of 14 cents, falling short of the anticipated 17 cents. That's the equivalent of showing up late to a party you're hosting. Not a great look. Sales-wise, Snowflake's product revenue soared 34% to reach $789.6 million. Overall, year-on-year revenue growth was a commendable 32.9%. They also boasted 485 customers generating over $1 million in trailing 12-month product revenue, a bump up from 461 last quarter. But it wasn't all sunshine and rainbows. Their net revenue retention rate slipped to 128%, down from 131% last quarter and 151% a year ago. That's like winning a race, but with a slower time than last year. Still good, but not headline-grabbing. Financial fortune-telling for the next quarter shows they're aiming for product revenue between $805 million and $810 million, translating to a growth rate of around 26.5%. This isn't bad, but Wall Street was hoping Snowflake would ride the AI wave a bit higher. Now juxtapose this with analysts who are still singing praises for Snowflake, like Rahul Nambiamparath from Trading Biz, who reckons Snowflake could climb past $200 in the short term, especially with its advancements in AI and large language models. Another analyst, Stefan Slowinski from Exane BNP Paribas, supports this with a buy rating and a $200 price target. Snowflake's influence on ETFs is also noteworthy. ETFs like Spear Alpha, TrueShares Technology, AI and Deep Learning ETF, and Global X Cloud Computing ETF all have significant holdings in Snowflake. These ETFs might see some action, positively or negatively, depending on how Snowflake's fortunes unfold. Snowflake's outlook is not entirely bleak. CEO Sridhar Ramaswamy highlighted strong core business and growing interest in their AI products, now generally available, and hope to deliver efficient AI-powered experiences faster than ever. They're also making strategic moves by acquiring assets from AI observability platform TrueEra to enhance their large language model applications. Despite today's stock drop and some mixed signals, Snowflake remains a key player. Think of it like your favorite sports team having an off day. A bit of a downer, sure, but you know they'll bounce back with some stellar performances. That's the scoop on Snowflake today, folks. Revenue up, earnings miss, forward-looking strong but tempered. Investors are cautiously optimistic, while some analysts still see plenty of upside potential. Stay tuned because it's clear Snowflake has more plays in its playbook. Holy AI! Buckle up, tech fans, because Microsoft's been making waves from its headquarters in Redmond to the far reaches of Kenya. Let's dive into why Microsoft is the talk of the tech town today. First up, there's buzz around Microsoft's plans for a LinkedIn Copilot. Yup, you heard it right. According to an internal document spotted by Business Insider, Microsoft is gearing up to supercharge LinkedIn with AI computing resources. While it's still unclear what these bigger plans involve, it's evident this could be another hefty leap for LinkedIn users beyond the existing AI tools, like AI-powered writing assistants. Think of Copilot as your digital Swiss Army knife for email threads, meetings, and cybersecurity threats remediation, now potentially coming to the professional networking giant. All eyes are on Microsoft to reveal more about this intriguing development. But wait, before you can start dreaming about the possibilities, there's some digital rain on this parade. Microsoft Bing and its AI-driven progeny, Copilot and ChatGPT Search, experienced a widespread outage. Users flooded social media and Down Detector with complaints about inaccessible services. Microsoft is yet to provide a timeline for restoring the beloved Bing search, leaving users to twiddle their thumbs and curse the tech gods. Even DuckDuckGo appeared to be facing similar issues, giving privacy enthusiasts some added anguish. On the economic front, the high-flying Microsoft stock has been quite the performer, jumping 35% since May 2023, driven largely by its AI advancements and consistent business growth. With a revenue boost of 17% year-over-year in its latest earnings, Microsoft's productivity software, Azure Cloud Platform, and even its gaming segment with the recent Activision Blizzard acquisition have been knocking it out of the park. Analyst Rishi Jaluria of RBC Capital is even betting Microsoft stock could hit $500, pushing its market cap to a staggering $3.7 trillion. That would make Microsoft the tech equivalent of a giant mecha, towering over its rivals. For those keeping an eye on international drama, Microsoft's collaboration with UAE-based AI firm G42 has raised eyebrows over potential national security concerns. The deal involves the eventual transfer of advanced AI tech like model weights, stirring unease among U.S. officials about safeguarding against Chinese espionage. Microsoft promises measures to prevent misuse, but specifics remain tightly under wraps. Meanwhile, Microsoft stock has stayed on a relatively steady upward trajectory amidst these concerns. And in the spirit of global posturing, Microsoft, alongside G42, announced a $1 billion digital investment in Kenya. This initiative aims to boost Kenya's digital infrastructure, including a state-of-the-art data center in Olkaria that'll run on renewable geothermal energy. The project promises to enhance internet connectivity, promote cloud and AI startups, and offer digital skills training to prepare Kenya's workforce for tomorrow's tech demands. Last but not least, a fun little partnership with Truecaller has surfaced, allowing users to replicate their own voice for answering calls using Microsoft's Azure AI Speech. Integrated into Truecaller's AI Assistant feature, this brings a personal touch to automated call handling. Now you can dodge those spam calls with a you that isn't actually you. So there you have it, a roller coaster of an AI-ridden day in the life of Microsoft. Whether it's adding AI oomph to LinkedIn, battling unexpected outages, or sparking excitement with stock performance and international expansions, Microsoft continues to steal the tech spotlight. Today has been a powerhouse of Google news, from manufacturing moves to big acquisitions, new features, and even some travel tidbits. Let's break it down for you. First up, Google is making big waves in India. They've chosen Tamil Nadu as the new production hub for their Pixel smartphones and even drones through their Wing subsidiary. This move aligns with Google's strategy to diversify its manufacturing away from China, which is similar to what's been going on with other tech giants like Apple. By setting up shop in Tamil Nadu, Google is not just expanding its global footprint, but also giving a significant boost to the local economy. This comes at a crucial time for India, especially with the upcoming elections and Prime Minister Modi's push for production-linked financial incentives. Locals in Tamil Nadu are pretty pumped, as this could transition the region from being known as the Detroit of India to a more advanced manufacturing hub. But wait, there's more. Google is reportedly eyeing a whopping $31 billion acquisition of HubSpot, a leading marketing software maker. This move could catapult Google's position in the cloud-based applications market and give Microsoft some serious competition. Imagine Google bundling HubSpot's robust CRM tools with Google Workspace. That's a combo meal deal every small to medium business owner would drool over. While no final agreement has been clinched yet, industry experts are buzzing about how this acquisition could shake up the market. What are your thoughts on this potential mega deal? In the quest to enhance user experience, Google announced plans to integrate inline sponsored ads within their AI-generated overviews in Google Search. Think of it as your search results getting a makeover with some stylish sponsored content. These AI overviews aim to offer quick summaries of search topics while boosting clicks on the links provided. It's a win-win for advertisers and users alike, though it does raise some eyebrows about online publisher traffic. Google plans to start testing this feature in the US before rolling it out globally. What do you think? More ads or more efficiency? Next, we're talking about pixel-perfect presentations. If you haven't tried Google Slides yet, now's the time to give it a whirl. This cloud-based presentation tool just got cooler with some Google Workspace integration and upcoming AI features, like Gemini, which helps create content automatically. Whether you're presenting a pitch deck or handling a school project, Google Slides has got your back. Plus, it's free. Can't beat that. And speaking of travel, Southwest Airlines ticket prices are now listed on Google Flights. Yes, that's right. You can now find, compare, and book Southwest flights directly through Google Flights, joining other big US carriers. This integration aims to enhance your flight booking experience, making it more streamlined and comprehensive. Lastly, Google Pay just rolled out 3 new features, including an expanded Buy Now, Pay Later option. You can also see card benefits right at checkout, and even use biometrics like fingerprints or face scans for secure autofill on Chrome and Android. Shopping just got way more convenient and secure. So there you have it, a day jam-packed with Google goodness. What do you think about Google manufacturing in India? Excited or skeptical about the potential HubSpot acquisition? And how do you feel about more ads in your search results? Let us know in the comments. We love hearing from you, so don't be shy. Drop your thoughts below. All right, today we're going to focus on NVIDIA, the superstar of our tech news rundown, and determine whether it's a stock you should be buying, holding, or selling based on today's explosive news. Keep in mind, this is just my take, and you should always do your own research before making any investment decisions. So what's the scoop with NVIDIA? To recap, these folks are absolutely crushing it. They reported a ridiculous 262% year-over-year revenue increase, bringing in a stellar $26 billion. Not to mention, they've got a 10-for-1 stock split coming up, which is seriously exciting for retail investors. And let's not forget their stronghold in the AI chip industry and the launch of the all-new Blackwell AI chip that's going to double the power of current models. It's like NVIDIA is serving us a tech buffet, and trust me, this is something you want on your plate. Their net income is up 7-fold, and their guidance for next quarter is even more ambitious, $28 billion. The company's dominance with AI hardware is making waves far beyond just tech circles. Products like ChatGPT and partnerships with tech giants like Google and Meta are solidifying their spot as the big kahuna in this ocean. Given all these jaw-dropping numbers and stellar prospects, I'm leaning strongly towards buying NVIDIA stock. Here's why. 1. Financial performance. 4 straight quarters of beating revenue guidance by at least $2 billion is no small feat. This level of consistency is rare and demonstrates strong operational prowess. 2. Market position. They're the undisputed leader in AI hardware, and with the release of the Blackwell AI chips, they're not just staying ahead, they're setting the pace. 3. Stock split. The upcoming 10-for-1 stock split is likely to make the stock more attractive and accessible to a broader range of investors, potentially driving the price higher. 4. Future outlook. Raising guidance for the next quarter and securing substantial net income growth signals that NVIDIA's trajectory isn't just up, it's stratospheric. However, as always with investing, practice caution. High-flying stocks can sometimes face volatility. Make sure NVIDIA's stock aligns with your overall investment strategy and risk tolerance. So there you have it. My take is that NVIDIA looks like a strong buy given today's news, but don't forget to do your own homework and consider all factors before diving in. Happy investing, and let me know your thoughts in the comments below. Is NVIDIA on your buy list, or are you seeing some red flags I missed? Wow, what a whirlwind of market activity today. NVIDIA stole the spotlight with jaw-dropping revenue gains and blockbuster product launches, solidifying its dominance in the AI chip industry and making the stock a tantalizing buy. Snowflake had a bit of a dip despite solid revenue growth, leaving investors cautiously optimistic about its future in AI. Microsoft kept everyone on their toes with exciting LinkedIn AI plans, but faced hiccups with widespread Bing outages. And Google, never one to sit still, is shaking things up with new manufacturing efforts in India, a potential mega deal with HubSpot, and fresh features in Google Search and Google Pay. If you enjoyed today's roundup, don't forget to like, subscribe, and share this video with your fellow tech enthusiasts. And make sure to join us tomorrow for another exciting day in the tech world.